Hello guys, welcome back to another amazing video by RALLYTOP Investing. Now in today's episode, I want to reveal to you my almighty strategy, and I call it the pump action strategy. Now I don't know why I am revealing this strategy to you, but maybe it's just a way of saying thank you to you guys for being loyal to RALLYTOP Investing all this time. Now, this strategy is a very powerful strategy, but very simple. Okay? Please do not take the simplicity of this strategy for granted, because this strategy has the potential to help you pass your FTMO without any stress. Okay? All you need to do is to master this pattern I'm about to show to you now, or that you are seeing on the chart now, and then follow the rules that I'm about to share with you. Okay? Now, why is this strategy so powerful? Well, I'm going to tell you the psychology of these three candles now that make this strategy so powerful. Take a look at this. Now, this is candle number 1, candle number 2, and candle number 3. Now, look at the high of candle number 1. This candle number 1 has printed a high. All right? And then after that high, candle number 2 has printed a higher low. After the higher low, it printed a higher high. That tells you that that's a bullish structure. Okay? Now, but immediately after printing the higher high, that's candle number 2, price travel back down to take out the low of this candle number 2, which was your higher low, and it printed a lower low. Can you see that? Now, let me show it to you using this for you to get it more clearly. This is your high. This is your higher low. And this is your higher high, which indicates bullish structure. And then immediately after that higher high was printed, price now travel back down to print a lower low. All right? Can you see that? Now, let me show that to you here so that you can understand what we are talking about. Take a look at what happened here. Look at what I've just drawn to you now. This is a high, higher low, higher high. And after printing that higher high, which indicates a bullish structure, price travel back down to take out this low, and then printed a lower low. This is the pattern you want to see on your either your H4 time frame, which is your higher time frame, or your H1 time frame, which is also your higher time frame. Now, your higher time frame, the choice of your higher time frame will depend on the style of trader you are, the type of trader you are. Any time frame that resonates well with you is what you want to look for this pattern. All right, as your higher time frame. I'm a day trader, and therefore the 1H or the 15M is my higher time frame. All right, that's what resonates well with me. Now, but remember, when you use your 4H as your higher time frame, your lower time frame would be the 15M. If you are using the 1M, then your lower time frame will be the 5M. Now, in this strategy, we are going to use 3 time frames. Very simple. It's nothing complicated. Now, you are going to be using, if you are using 1H, you're going to be using 1H, all right, as your higher time frame, then 5M as your lower time frame, and then 1M as your entry time frame. Now, if you are using the 4H as your higher time frame, you are going to be using 15M as your lower time frame, and then the 5M as your entry time frame. As simple as that. So that's diagram number 1. Now, diagram number 2, as you can see, okay, diagram number 2 is exactly the same as diagram number 1. Now, diagram number 2, look at this high. A high is printed there. Now, the next candle printed a higher low, and printed a higher high. That's a bullish structure. And immediately after printing this higher high, price travel back down to take out the higher low and printed a lower low. Can you see that? Now, let me show that to you before I explain some things. This is what you have. A high here, higher low, higher high, which is a bullish structure, and all of a sudden price travel back down to form a lower low. All right, this is what you have in the market now. Take a look at what you have in the market. This is what you have in the market. All right, it's exactly the same as this. Take a look. This diagram is the same thing as this. All right, now some of you will argue that how about this small bearish candle? Well, this small bearish candle is insignificant. All right, when you are trading with this strategy, this small bearish candle is insignificant. Why is it? It is because the high and low of this bullish candle are protected. And therefore, this is an inside bar. And as far as this strategy is concerned, this inside bar is non-existent. All right? It's non-existent. It's null and void. All right? So these are the patterns you want to see either on your 4H as your higher time frame or your 1H as your higher time frame. All right? Now, let me get to the rules. We have 6 rules here. Please pay attention because I'm going to explain all of the rules as we go on the live chat. All right? Now, number 1 rule says identify any of the candlestick patterns on either 4H or 1H time frame. And I have just done that. All right? I've told you that these patterns must be found on the 4H or 1H time frame. Second rule says mark out the middle candle with the highest high or lowest low, as the case may be, as your POI and wait for RTO. RTO here means return to origin. All right? Let me use this diagram to quickly explain to you what that rule 2 means so that you will understand. Now, let's first of all, all right, let me first of all mark out the OB. It says mark out the middle candle with the highest high. In the case of a bullish structure, this is the highest high. Now, whatever I'm showing you here on this bullish structure, it is exactly the same when we're talking about the bearish structure. It's just that it's in the reverse. It's in the reverse. All right. So he said, mark out the middle candle with the highest high or the lowest low, as the case may be, as your POI and wait for RTO. Now, this is your POI. This is the highest high here. This one is the highest high. All right. So this is your POI. As simple as that. That's your POI. Okay. Now, in this case, this is the highest high. This is also your POI. It's as simple as that. This is also your POI. All right. So this is your POI. And then it adds that waits for RTO. So where is the RTO? Now, let me show you what it means by RTO. Let me show that to you now. Now, take a look at this. Okay. I'm just, let's paint a picture here. Just paint a picture here. Now, return to origin, this bullish candle. After price printed this bearish candle that formed a lower low, price now went back to this POI here and tapped into it. That's what rule 2 says. All right. The same thing with this one here. It's just exactly the same thing. All right. I don't know whether I should do it also, but exactly just the same thing. All right. It's the same thing. Just a minute. So the same thing here. Price went back and tapped into this point of interest. All right, that's rule 2 fulfilled. Rule 3, identify the candle that tapped on the POI and switch over to the 5M or 15M respectively to find the same pattern. That is, you want to see this same pattern on your 5M or 15M, depending on the higher time frame that you choose. All right. Now, he said, mark out that candle that tapped. So you could use the vertical line tool on your trading view to mark this out. This is that one. And here also is this one. This one. He said, mark it out. So you can mark it out here like this. All right. You can mark it out. And then he said, when you mark it out, switch over to the 5M or 15M respectively to find the same pattern. And I'm going to show you that when we get to the live chart. All right. And rule 4 says, on the 5M or 15M time frame, identify the candle that takes out the low or high of the middle candle, as the case may be. And I'm going to show you that when we get to the live chart. And rule 5 says, switch again to the 1M or the 5M. Remember, I told you are going to be using 3 time frames. So switch over to 1M or 5M, as the case may be, and mark out the middle candle as your OB and place a limit order. I'm going to show you all of that. And then rule 6 says, TP is 1 to 5. As simple as that. Don't be greedy. 1 to 5. All right. You can be making 1 to 5 on daily basis, every single day. 1 to 5. All right. So now let me quickly show you these things on the chart, on the live chart, so that you can understand. Let me quickly show you on the live chart. So let's start with this here. Which one can we start with? Okay, let me quickly start with this one. Okay, let's start here. The most recent, so that TradingView can allow us permission to get to 1 minute. All right. So look at this. This is a low. All right. After this low, lower high, lower low. Can you see that? Low, lower high, lower low. And then after this lower low, we have higher high. This is the pattern. All right. This is the pattern. You have, this is 1 hour. I'm using 1 hour. It said identify any of the candlestick patterns on either 4H or 1H time frame. I'm using 1H. So I've identified that pattern here now. All right. Now mark out the middle candle with the highest high or lowest low, as the case may be, as your point of interest, and wait for RTO. Now, this is my point of interest. This is going to be my point of interest now, this one, because that is the middle candle that has printed the lowest low. All right. Sorry. So this is my point of interest. As simple as that, guys. It's not a difficult strategy at all. Where is the point of interest? I'm sorry. I'm making a mistake here. Let's identify the middle candle. This is the one. This candle here. This candle. This is the one. That's the candle with the middle. So that's the candle. Okay. That's the candle. Let's make it bolder so that you can see. I'm not making up. It's the candle. Okay. Let's take out this again so that we'll be too sure of what we are doing. So as you can see, that's the lowest low. All right. So that's the candle. So now this is your OB. So you mark it out. That's your OB. Okay. This is your OB. And that's your OB. All right. Now, rule 3 says, no, rule 2 says, mark out the middle candle with the highest high or lowest low. This one is the lowest low. As the case may be, as your POI, we have marked that and wait for RTO, that's return to origin. Now, as you can see, when we mark that candle, price went up and then return. This candle tapped into it. This bearish candle tapped into it. All right. At this point, you will now do something. All right. Rule 3 says identify the candle that tapped on the POI and switch over to the 5M or 15M respectively to find same pattern. Now, you can use, like I told you, you can use your vertical line to mark this candle that tapped into this POI. This is the candle. All right. Now, why do you have to mark that candle? You mark that candle because when we get to our lower time frame, we want to start looking for trading opportunity, for opportunities to enter the market on the right hand side of this vertical line. All right. So now we will switch to the 5M because I'm using the 5M and the 1 hour as my higher time frame. So we go to the 5. We go to the 5M. Let's see what happens on the 5M. Okay, so this is the 5M. That's the vertical line that we placed on the 1 hour time frame. All right, that's the vertical line. So now, because that's the vertical line, now take a look at this. Take a look at this. So we want to look for trading opportunity for the pattern. We want to look for that pattern on the right hand side of this vertical line. That is this side. Okay. So now let's begin to look at the pattern. Now take a look. This is the pattern here. You can see price printed a low here. This one is inside bar. Price printed a low here. Or is this one a low? Then lower low. It printed a low, lower low. Lower high, lower low. And then we have a higher high. Can you see that? We have a higher high. Now, so once you find that, This is rule number 3. Identify the candle that tapped on. We have done that. This is rule number 4. On the 5M or 15M time frame, identify the candle that takes out the low or high of the middle candle, as the case may be. Now, this is the middle candle. This is the one that has printed the lowest low. All right. And this candle took out the high of this middle candle. Can you see that? Now, remember, it may take out the high or low with a candle closure or with a candle wick is still valid. All right. So he said, mark out. Rule 4 says on the 55M, say mark out. Identify the candle that takes out the low or high of the middle candle. And now, this is the candle, this one. So you can use this, your vertical line, bring it down to that point. Bring it down to this point. Okay? So that is the candle that has taken out the high of this very middle candle. I hope you understand what we're trying to say. That is on the 5M. And then rule 5 says, switch over to the 1M or the 5M, as the case may be, and mark out the middle candle as your POI. Now, when we get to the 1M now, because I'm using 1M and 1 hour, 5 minutes, and 1M as my entry time frame. Now, when we get to the 1M, I want to start looking for opportunities on the right-hand side. All right? So let's get to the 1M now. This is the candle. This vertical line identifies the candle that took out the high of this middle candle. All right? So let's get to the 1M now and see what happens there. Okay, so this is the 1M. That's the vertical line on the 1M. Okay. So now, on the 1M, we want to start looking for opportunities to buy this market. All right? Now, this is the first one. Take a look at this first one here. After that vertical line. Now, after this vertical line, take a look at the first one. All right? After the vertical line. I hope you understand what we're trying to say. After the vertical line. So this is the first opportunity. First trade opportunity after this vertical line. All right? And as you can see, this is the lowest low. The candle that prints the lowest low. After that candle printed the lowest low, take a look at the next candle. It took out the high of this middle candle. Now, I've told you it could take it out with a candle closure or with a candle wick. It's still valid. All right? So this becomes our POI, our OB. All right? So you can mark the whole of this candle as your OB. Or if you want to refine it, then you can mark the wick here. Take a look at this wick. Why is this wick important? This wick, all right, is a strong OB because it took out the low of this previous candle here. Can you see that? So that is a strong OB if you so like. If you don't like it, you mark the whole of that candle. So that will become your point of interest. All right? And therefore, we want to take a long position there. And remember, the rule is 1 to 5. Nothing more, nothing less. 1 to 5. So give a buffer to your stop loss, a bit of buffer like that, and then you are free to go. Okay, I'm coming. So that's your trade there. That's your trade. And look for 1 to 5. So where is your 1 to 5 here? You don't have to be greedy. That's your 5, 1 to 5. All right. And as you can see, price actually gave us 1 to 5 so easily. All right. That's your trade there. 1 to 5 easily. Can you see that? Very easy trade. Very easy. That's your 1 to 5. Okay. Price tap on it and continue to move higher. All right. It continues to move higher. So that's the first trade. after this vertical line. Now, let's look for another opportunity for the second trade. Now, remember, this your higher time frame. This your 1H. This your 1H is still valid. Is still valid. Please remember that your 1H is still valid. This is your 1H, which is still valid to this point. All right, it's still valid to this point. So you will continue to look for trades until it gets to this point. All right. If you go back to your 1H, you will realize it's that point. So now we want to look for another opportunity. Now another opportunity has presented itself here. Take a look at this candle. This is a low, this is lower low, and this is higher high. All right. So this middle candle that prints the lowest low is your OB. All right. Like I said, you can mark the whole of this candle. But another rule I want to give to you is that your stop loss must not be more than 10 pips. Highest, maximum 10 pips. But I do not trade with 10 pips stop loss. My max stop loss is 5 pips because I enter using the 1M. All right. So now you can mark the whole of this candle or you mark the wick again. Like I said, in this case, if you took the wick, all right, the wick of this candle, take a look at this. The wick of this candle. All right, take a look at it. It would have been a loss because if you didn't give a buffer, you would have been taken out of the market. Look at it. You would have been taken out of the market. Look at it. It wicked below it. So this would have been a loss. So this would be -1. As simple as that. That would be -1. Okay? So after then, but remember here you made 1 to 5. And therefore you now have 4% of your account after that, after this -1. All right? Now, another opportunity presented itself here. Now, take a look. After this candle that printed the lowest low, the next candle is inside bar. This other candle is inside bar, but this next candle, all right, now printed a higher high. Can you see that? Now, this is your OB here. This is your OB. Very simple strategy, but you just need to follow the rules. This is your OB, guys. This is your OB. This one is your OB. All right? And you stretch it out. As you can see. All right? It tapped on it. Remember, 1 to 5 as well. You are going long. 1 to 5 here. 1 to 5. As simple. Give a buffer. 1 to 5. All right? So let's mark 1 to 5 and see whether we could get 1 to 5. So where is 1 to 5 here? I don't know whether we can get 1 to 5, but that's our trade. If we don't get 1 to 5, fine and good. We're targeting 1 to 5. So we have our 1 to 5 clearly hit, and price continues to go higher. And you see, 1 to 5. So we have 2 trades there. 1 to 5 here. Here, 1 to 4, because we got a loss of 1% here. All right? So between here and here, we have made 9%. Simple trade. Simple. Now, we have to go back to the 1H time frame and see what is going on there. We need to go back to the 1H time frame. Okay. So we are back to 1H time frame. Now, as you can see, we want to start looking for our pattern again. Take a look at this. This is a high, higher low, higher high, and then we have a lower low. All right. So this is your OB here on the 1H time frame. This is your OB on the 1H time frame. This one is your OB. Now, when price took out that OB here, where is the candle that tapped into it? Remember, we are still following these rules here. He said, identify any of the candlestick patterns on either 4H or 1H time frame. I've identified the candle pattern here on the 1H time frame. Now, rule 2 says, mark out the middle candle with the highest high or lowest low, as the case may be, as your POI, and wait for RTO, which is return to origin. I've done that now. So where is the candle that returned to the origin? It is this one. After price took it out here, this one went back to return to origin. All right. And rule 4 says, identify the candle that tapped on the POI and switch over to the 5M or 15M respectively to find same pattern. This is the candle that tapped into it. So I'm going to use this vertical line, all right, as in the previous case. And that's the vertical line. That's the candle that tapped into this point of interest. So when we get to the lower time frame now, my 5M, I want to start looking for that same pattern on the right hand side of this vertical line. Okay, so we can now go to the 5M time frame to see where we are. Now, so this is the 5M time frame. Let's quickly see where we are. Okay, so this is that vertical line. Okay, so we want to start, that's the vertical line. And let's see. Now, rule 4 says on the 5M or 15M time frame, identify the candle that takes out the low or high of the middle candle, as the case may be. Now, this one, this is the first one after this vertical line. All right. So we want to see higher high, higher low, higher high, lower low. So this is the candle, this one. So where is the candle that broke it? It is this candle that broke it. All right. So we can now move this very one to this candle that broke. All right. Because that's what it says. Say identify the candle. No, rule 4 on the 5M or 15M time frame. Identify the candle that takes out the low or high of the middle candle, as the case may be. This is the candle. Look at it. Let me take it out again for you to see. This is the candle. This is the candle that took out the low of this very candle, this middle candle. This one took out the low. All right. As you can see, this is the low. This one took it out. I've told you whether it takes it out with the candle closure or with the candle wick is still valid. All right. So that's it. Then rule 5 says, switch again to the 1M or the 5M, as the case may be, and mark out the middle candle as your POI and place a limit order. So let's get to the 1M now. This is the 5M. We are looking for, when we get to the 1M, we want to look for opportunities on the right hand side of this vertical line. All right. So let's get to the 1M and see. So let's, let me see where we are on the 1M. I hope Trading View will allow us to get there. I don't know. But let's see. Okay, so this is where we are. This one. So on the right hand side of this vertical line, we want to start looking for opportunities to go short here. All right. Let's see whether we'll have any opportunity to go short. Any opportunity to go short? Let's see. Until we find where price taps back into this point of interest. All right. So let's see. Okay, so we can start from here. This one. This is a high. No, this one didn't print a higher low. It printed a lower low. So it's not valid. Then we move to this one. This one too printed a lower low. It's not valid. Okay, so we continue to look for the one that is valid until price taps into this. All right. Until price comes back into this point. Let me see. Let's see it. Let's drag this out more. All right. That's it. Until price comes back to it. Now, There was nothing there. Now, take a look at this one. This is candle number 1, candle number 2, candle number 3. Look at high, higher low, lower low. Can you see that? So this is your candle. This is your OB here on the 1 minute time frame. This one is your OB. Correct? Correct. That's your OB. As you can see, we want to enter short. That's your OB. So we want to enter short. So place your limit order to go short. So this is your limit order. This is your limit order to go short. And give a buffer and then target 1 to 5. So where is our 1 to 5 here? Let's see. Let's see 1 to 5. Let's see whether we have 1 to 5. Okay. That's 1 to 5. Smashed. Can you see that? Look at it. Smashed easily. Smashed. Can you see that? Smashed easily. Oh God, what happened? So that's it. 1 to 5 smashed easily. All right? Can you see that? Very powerful strategy. Now let's look for another one. Let's look for something else. Now take a look at this one. This one didn't work. This one is not it. It's not it. It's not it. All right? So where is another one that works? We want to look for opportunities. We want to look for opportunity. Where? No one is working. Okay. So, okay. No one. Now look at this. This one too didn't work. This one too didn't work. Okay, this is a high, higher low. I think that is a higher low. Yes. A high, higher low, higher high. And then where is the lower low? This is the lower low here. Because everything here, I think this is the lower low. Everything here is inside bar. So this is the lower low. So this is our OB here. Look at it. This is our OB here. This one. This black candle is our OB. This is our OB here. Okay? This is our OB. Yes. That's our OB. As you can see, this one took it out. And therefore, where is we place a trade here, a trade there. Look at it. We place a sell trade, a limit order here. Can you see that? And we want to target 1 to 5. It's as simple. Give a buffer. And then where is 1 to 5? Well, in the case like this, you can have 50% of this your stop loss, 50% of your POI. All right? If you see that it's too large, I don't know. But remember, 10 pips is your maximum stop loss. Like I told you, just 10 pips. As you can see, this is still within it. This is 7 pips. This is 7 pips. Okay? So, but did it give us 1 to 5? Let's see. Well, in this case, it didn't give us 1 to 5. So we would have lost in this trade. -1. Because it didn't give us 1 to 5 before going back up to take us out. All right? So now the next one is here. Take a look. High, higher low, higher high. All right? And then lower low. Can you see that? So this is our next trade we would have taken. This one. Let me show that to you. This is our OB here. This is a powerful strategy, guys. That's our OB there. All right? So we would have taken trade from there, going short. Take a look. Going short from there. This is a banger, guys. This is a banger. So we want to target 1 to 5. 1 to 5. All right? Where is it? That's 1 to 5. Hit. Smash effortlessly. Can you see that? Powerful. Powerful strategy. Powerful strategy. All right? Well, this is where we'll draw the curtain into this video. Now, if you had any value, please, I want to appeal to you to give us thumbs up. All right? We need it. It's completely free. Just give us thumbs up so that the YouTube algorithm will be able to show this video to more people so that they too can gain the knowledge you have gained. All right? It's as simple as that, please. And if you are yet to subscribe to our YouTube channel, please do so just immediately and turn on the notification bell so that anytime we publish a new video, you'll be notified about it. Okay? Now, if you haven't joined our free Telegram channel, please do so just immediately. It's completely free. I'm going to leave the link in the description. And if you want to be part of our VIP community, right now we are running a promo, all right? And we have reduced our mentorship fee ridiculously. With only $50, you can become part of the VIP community. And I'm going to also leave the link to that one in the description. All right, guys, I see you in our next educational video.